Hey investors, today we're looking at the Jacksonville, Florida real estate market. We're going to take a look at the overall market as a whole, and then we're actually going to take a deep dive into an actively listed investment property to look at things like cash flow, return on investment, cash on cash returns. And in essence, we're going to see if we purchase an investment property in the market of Jacksonville today, will it make financial sense? Would it be a good investment? If this is your first time to the channel, I'm Dave Hathaway. On this channel, we discuss real estate, we discuss investing, and we discuss building wealth. So welcome. Today, we're going to look at the address 4230 Packard Drive, Jacksonville, Florida, 32246. Like I said at the beginning, we always like to look at the overall market. And that's because we want to see if a market's trending up, trending down, and just like a wave, we want to ride it going up and not the other way around when it's crashing down on us. So the overall market of Jacksonville, the top three economic drivers are number one, healthcare. Number two is logistics and distributions. And number three is finance and insurance. And in Jacksonville, they have 4 Fortune 500 companies headquartered there. So that is awesome. That includes CSX Corp, Railroad Company, Fidelity National Information Services, which is their financial arm, Fidelity National Financial, which is title and insurance company, Landstar Systems, which is a transportation company. So awesome for employment. They have some major sports teams, which include the Jacksonville Jaguars, an NFL team. They have an international airport there, Jacksonville International Airport. And some interesting things I found about the market was that the St. Johns River, which is the river that runs through Jacksonville, is super unique. It flows north, making it one of the only rivers in the world to do so. So it's a popular spot for boating, fishing, and just enjoying the scenery. So with the overall market stats, it has a population of 997,000 people, and it's up 1.15%, which is crazy growth. And if you look at that chart on the screen, you can see that thing goes up and to the right. And that is an awesome sign. That's always going to be a sign you want to see for a trending, growing market. Unemployment is at 3.6%, which is up 0.2%. Not a good thing for unemployment to be going up, but the average in the US in November is 4.2%. So 3.6 is a great number. Average salaries is $57,000. The median sales price on properties is $303,000, up 2.4% year over year. And it's also up 19 days on market. So that means that the median sales price is probably going to flatten out, if not start to go down, if it's up 19 days compared to where it was last year for days on market. That just means that properties are sitting on the market for 19 days more than they were a year ago. So that's trending in the wrong direction, or trending in sales prices going down if that were to continue. Median rents for Jacksonville is $1,618, down $32 from last month. So rents are trending down, which is piggybacking on days on market going up. And the price to rent ratio, which is a ratio which tells us if there's going to be any cash flow in the market, is 15.6. If that's under 15, it shows that there's going to be cash flow in the market. And so we'll see if we can find some cash flowing properties. When I look at all these stats together and I look at the overall market of Jacksonville, it seems like a really strong market. It's got 4 Fortune 500 companies. It's got a major sports team. It's got an international airport. It has a growing market. Unemployment's relatively low. It has decent average salaries. And the only thing that's concerning at all is that median sales price might flatten out or might go down, and rents have trended down a little bit. But as long as you know that, I'm going to say 2 thumbs up for the Jacksonville market. That's the only thing. So you just have to buy right. The overall market looks great. So I'm going to bless that as a good market to invest in. Now, we move on to the Google Street Test. The reason I picked this subject property was because it's near St. John's Town Center. I actually haven't been to Jacksonville personally. I might have driven through there once or twice, but I haven't been, so I don't have intimate knowledge of the local market. But when I look at Google, I look around for town centers, I look around for Walmarts, I look around for Starbucks, I look around for Costco's, and I know these are going to be in areas that are probably going to appreciate or have the best chance of appreciating in the future, and where people are going to generally want to live. And so I found an area that was near St. John's Town Center, near the University of North Florida. And again, there was a bunch of Starbucks surrounding this property. There was a Home Depot right near it. There was a Walmart near it. That's why I picked the property. When I look at the actual properties on Google Street Maps, it looks like they're in pretty good shape. It looks like they've probably been fixed up. Their yards are decent. There's not a lot of trash. There's not a lot of cars. The only thing that's fun about these pictures is this nice gentleman across the street that's waving hello to the Google Maps car. No, he must not be doing anything wrong or what anybody would be doing wrong. He's just waving. Now, you can see people do weird stuff to the Google Maps car all the time because they're kind of shocked. So this dude's flicking the car off. But the other things that I noticed that are great are that there's nice mature trees on these lots. And so I'm going to give it a pass for the Google Street View test, other than the dude that's flicking off the Google Maps car. Moving on to the listing details. So the property that we picked was listed about $240,000. It's a 3-bed, 2-bath, single-family house. Has 984 square feet, so kind of small. Built in 1973. And when I look through the listing pictures, the things that kind of stick out to me are it's kind of dark on the outside. It's got security bars on all the windows. It's got security door on the front door. My rehab suggestions would be removing those security bars off the windows. I would replace the security door with an actual storm door, all glass storm door. And then I'd give that front door a nice paint job, maybe a nice red. So you actually have something that stands out, not just brown on brown on brown. Give it something that looks good, something that's going to pop. Now, when we move into the house, it's a bit dated. The kitchen's an okay layout. I wouldn't do anything crazy in the house. I would definitely in the kitchen add granite countertops and stainless steel appliances. I might even paint the kitchen cabinets if they're still in good shape, and I'd paint them probably a light or a medium to dark gray. And I'd add hardware on the kitchen cabinets because that always allows them to last longer. And then I'd replace all the light fixtures, super easy fix. Probably put some ceiling fans in there so you'd save on the AC cost a little bit. Depending on the carpet condition, it looks like it's stained in a few places, but if I can't reuse or clean the carpets, I'd install LVP throughout the house, give it a nice pop. Then going into the bathrooms, I'd actually install a nice frame mirror, and I'd probably just leave it and just go with it at this point. The rest of the bathroom, even though you could do kind of a nice bathroom update where you do tile surrounds in the shower and a new vanity. But if I'm trying to save a little bit of money, I might skip on that I'm upgrading the kitchen and giving that a good look. My budget for this renovation would be somewhere around $15 to $20 a square foot. And so I think you could probably squeak out somewhere between $15,000 and $20,000 in a rehab in this property. Now moving on to the analyzer, and if you guys don't have the deal analyzer that we show here, there's a link usually in every single one of the description for a bunch of documents that you can download and our deal analyzer that you can download. It is free. Just go there. You got to type in your email address, download the deal analyzer. It's what I still use to this day to analyze properties. So Zillow states that rents for the property should be at $1,633. When I look at comps, I see a bunch of properties are listed for rent about $1,800. They're a little bit nicer, but if you're going to do the LVP and you're going to put in stainless steel appliances, I think you could bump that $1,633 up to maybe $1,700, so you're at least a little bit closer to the surrounding properties that are being listed. Property taxes were a little bit tough to figure out on this one. It looks like a year or 2 years ago, property taxes were in the 400s, and then the tax assessed value jumped almost like triple. I'm going to put property taxes, I'm going to estimate them in at $1,000. I might be still low there. And then so if you look at the analyzer at the bottom, this property will cash flow if you do an all-in cash purchase, so all cash, no financing, at $1,110.67. You'd basically be getting a 5.38% cash-on-cash return, which isn't very good, especially with money markets being at a 4% or 4.2% return. And so I don't love that right off the bat. If you were then to do a cash out refinance on the property with a DSCR loan, you would have to go lower than 75 loan to value. Our analyzer analyzes doing a 75% loan to value. And at this rate, at 75%, you are at negative cash flow. So you wouldn't actually be able to get a DSCR loan. If you don't know what a DSCR loan is, it's a debt service coverage ratio loan. You can watch this video on what those are, how you can use them as an investor to scale your portfolio. But for the DSCR loans, you have to be in a positive cash flow territory to qualify for those things. So either you have to take a lot less LTV, so you're going to be taking less money back out of the property, and so you're going to leave more of your money in the deal. But for this one, with 75% of the LTV, you're going to be negative cash flow, which I always recommend. Do not buy a negative cash flow property. I don't even like just a very little bit of cash flow, because you'll be losing money if it's negative cash flow, or even a little bit. You'll probably be losing money each month, because if you have to do repairs or anything above and beyond, you'll be pulling out of your own bank account to support that property. So I do think with the market fundamentals, you'll get some appreciation, but you're not really getting any equity when you purchase this property. I actually put it on the deal analyzer that I'd purchase this property at $220,000, because I think it's a little bit overpriced for the comps, but you're just not getting cash flow here. And since you're not getting equity and you're not getting cash flow, I don't love it. You're banking all on appreciation, which I would not do. That's more of a speculator's game or a gamble. It's not guaranteed. If you have cash flow, you're guaranteed to make money as long as you're running the property well and you have enough cash flow. And then the additional things that you have in Jacksonville are you have kind of this insurance, which I think has bumped up to where it's going to go, but if there's a bunch of natural disasters in a row, insurance could go even higher. So you do always have that as a risk factor. And so I'd be worried about that a bit. And I'd really want a good deal if I'm purchasing in Florida or anywhere that has like a high rate of natural disasters, because you take on that risk and that stress of all of a sudden you had a bunch of properties in Jacksonville or somewhere on the coast of Florida and you have multiple hurricanes. It's going to be a bit stressful even if you're not managing the properties. So I'm going to give this property a thumbs down. I'm going to give the market 2 thumbs up. So you got to find the right property in this market that cash flows, but the overall Jacksonville market seems to be awesome. If you guys want to check out other videos on market analyzation in Florida, you can check out Tampa. We've done there. We've done one in Sarasota. And so you can see what those markets look like compared to Jacksonville. I'll see you on the next episode.